I wanted to start today's video just looking at a random chart. So no matter what part of this chart we're looking at, I've not cherry picked this because I'm scrolling through it, and you notice that almost every candle here, we're in the 15-minute time frame, and 95% of candles have a wick at the top or the bottom, or both the top and bottom. So when you identify something that happens 95% of the times, and trading is a game of probabilities, then it warrants further investigation to see if we can understand what's happening here, and if we can build an edge on the fact that these wicks are forming at the top and bottom. Now, after this video, I guarantee you this will help when you're trading. It will maybe help you not going into drawdown and get a better entry, and it will help you exit trades as well. So if we come over just to a sketch pad just now. So if we look at this example here, you can see to the right hand side we have got a bearish candle. Now we have an open, we have at the top here the high, we have the close, and we have the lowest point. So the highest point, the lowest point, the open point, and the closing point. Now if we look here to the left hand side, this is my trading model. I trade during a session when there's volume, when we're breaking a level into a clean range. That is my trading model in a nutshell. But I also break down the anatomy of the candle, because on the basis that every candle has a wick at the top and bottom, or 95% do, why would I want to enter this trade right here when there's no wick in yet? Because the probabilities tell you that this candle that's just opened is going to go down and create a bottom wick. So this, if you entered, is when you would be in drawdown. Okay, this is when you'd be in drawdown. So I like to have a rule, and my rule is this: I do not enter the trade for the first 2 or 3 minutes. The first 2 or 3 minutes, I'll just change this. So for the first 2 or 3 minutes, I do not want to be in a trade. I want to wait on this wick forming first here, and as we break through here, the level that I was waiting on, if it's minute 2 or 3, then I will happily take the position. Also, as this candle comes up, this up here is minute 12. It retraces back down because 95% of candles have wicks at the top also. So it comes up here in minute 12 and then comes back down here minute 15. So my rule is I do not want to be in a trade after minute 12. I want to give it 2 or 3 minutes to create this top wick as well, coming back down, retracing back down. So we've got 2 or 3 minutes at the start we're waiting, and then we exit 3 minutes before the end. So that then tells us that we obviously between minute 3 and minute 12, we've got about 10 minutes here, and we actually want our trade to play out for at least 5 minutes. So the magic number here is 7. So when this candle opens, I've got a buy order sitting pending right here. If it doesn't, and I set that buy order after about 2 minutes. Okay, after about 2 minutes I set that buy order. If it isn't tapped by minute 7, I cancel the order and I don't take the trade, because I need at least 5 minutes for this to travel up here. Okay, so minute 7 is my magic number. That's usually I like to see it between minute 3, 4, 5, 6, 7, breaking through this area. When it breaks through this area, it usually surges. I call it like a surge. and it goes very fast. Okay, so that is the whole premise behind the anatomy of the 15-minute candle. You wait 2 or 3 minutes on that bottom wick getting dialed in, and then you get out 3 minutes before the end. So kind of minute 7 is the last minute that you would like to enter it, giving it those 5 minutes to get up here. So that's how I break down the candle. Now, if the wick doesn't go in, I said this in a previous video, if you're going through the level and this candle opens, there's no wick, and we're breaking through here in minute 2, what do? We can still enter, but we would enter risking half the size that we initially were willing to risk. So on this setup, if we were going to risk $100, because it's a perfect setup, the wick's dialed in after 2 or 3 minutes, we're getting into a clean range, risk your full $100. If it starts to go through in minute 2 with no wick, then you can enter half the position. Because what you can do is, again, every candle creates a wick, so you could, when it opens here, you could have your other half a position to enter right here, because this wick's going to come down, tap you in before heading back up. Or if you want to be really conservative, this comes down, you can say I'm going to wait until here, until this very candle flips from bearish to bullish. Or you could wait on the previous candle's wick. So there's a number of different things you can do to enter the other half. But let's look at some chart examples. So over here we are on gold. Just check for our example. So you can see here we have this candle here breaking through. Here is the level, the white line. This candle has opened here. It's came up, created a wick. That was in 2 minutes. This is where it opened. It created a wick in 2 minutes. It broke through the level in minute 3. Came all the way down here. This is minute 12. And then it retraced and closed at minute 15. Perfect example. This is the open, okay? So we don't want to enter until this wicks came in. This came up here in 2 minutes, came back down, ended up tapping us in, our buy order sitting here, and we set our order after 2 minutes. We actually wait on the 2 minutes. Once the 2 minutes have passed, we sit our buy order in here. If it isn't tapped in by minute 7, we close the order. We don't take the position. So this is minute 3. You can see here it's come all the way down here to minute 12, and this is the reason why we get out the trade, because the bottom wick, why be in a trade for the last 3 minutes or the last 2 or 3 minutes when 95% of candles retrace and create that bottom wick? It just doesn't make sense. So I like to be in and out in the one candle in the 15 minute, and this is a real trade I actually took. Here was my level here I was waiting on. I noticed there was a level here we were struggling to break through. So I've got another example here, and it's on NQ. So here is our other example here. We are looking at this candle that breaks through this level here. So this level was defined because you could just see we were bouncing here, and then when the session started and we started to get volume, we tapped off it here, tapped off it here, wicked it here, and then finally when we come through it during the New York session, this opens, comes up, creates this wick. This is in minute 4, and by the time it comes back down and taps me into this trade, it is minute 6. So another minute I would have closed this trade and wouldn't have took it, because I need at least 5 minutes for this trade to play out in the 15-minute candle. So you can see here it tapped us in at minute 6, and in this instance we never had a bottom wick, but most candles do. So this is just pure price action trading. Go and watch my previous video. I discussed I'm looking for levels only on the 15 minutes, only during my defined session, and your session may be different. I trade London and New York, I trade gold and NQ. I always recommend when somebody's starting out trading price action that they stick with just one asset on the one session. My session is 90 minutes before New York opens and 90 minutes after, and I sit out that 30 minutes, 15 minutes either end of the actual open, because anything can happen there. Again, it's a game of gambling when you're trading during the open. So again, trading is all about probabilities. The anatomy of the candle will really help you define when you're going to enter the trade and when you're going to exit the trade. You will find yourself getting better entries, getting better exits, and being less drawdown. So I hope this video has been helpful. Until the next time, stay safe.